Bitcoin was able to effectively compete as the on-chain analytics that we have imply. I believe that it is still in the bull market, and I believe that you can say the same thing about the equities markets at this point. The instability caused by tariffs caused a great number of investors to lose their money. I really enjoy bull markets like this one, because what is occurring is that the equities market is climbing a wall of fear, and what has been wonderful about this time around is that it has not been an unhealthy bull market like it truly was from 23 to 24 when it was at its extremes. As time goes on, the market is opening up. The statement that Cathie Wood just said is very accurate. In addition to the market expanding, we are also beginning to observe a laser-like concentration on certain initiatives that are bringing incredible benefit in the real world. That might be accomplished through the use of real-world assets, through the use of tokenization, or even through the use of financial instruments that improve the lives of individuals. A growing number of individuals are beginning to concentrate their attention on this blockchain hash graph-based technology because they have come to the realization that it is going to transform the way that the world operates. Moreover, very intelligent capital is pouring into the cryptocurrency field at an unprecedented rate, particularly into specific initiatives such as XRP and HBR at the present time. And a significant portion of the reason for this is due to the fact that Cathie Wood is going to show us a lot of information in the video that we are going to see today. And that is precisely why I am presenting you with this brand new update from none other than Cathie Wood. In it, she discusses the massive market reset and how the future of blockchain and cryptocurrency is extremely likely to look. Although you probably already have a good idea of what she is talking about, I believe that it is going to be looking really good for XRP based on this information, and I am extremely excited about the future here. In that case, let's get right down to business and make sure that everyone in the XRP army is able to see this by pressing the like button. It is our belief that we are getting closer to the conclusion of this rolling recession with some degree of clarity over tariffs and the income tax package. Consequently, the big beautiful bill, which we do feel will propel us from a rolling recession into a rolling recovery, is something that we expect will acquire speed as we move from this year into the following year, with productivity being the major surprise and real GDP growth benefiting from it. Additionally, we believe that the other surprise will be a far lower rate of inflation than anticipated as a result of productivity. At this time, a significant number of individuals believe that greater inflation is associated with real GDP growth. When growth is stronger, inflation tends to be higher as well. I mean, if you look at history, you'll see that's completely incorrect. Productivity is a powerful anti-inflationary factor, and the higher the growth rate, the higher the productivity and the increase in productivity. We believe that this is going to be the case this time around, possibly even more so than in the past, because of all of the deflationary undercurrents that are associated with the explosion in new technologies, catalyzed especially today by artificial intelligence, which is, as we have discussed in the past, an extremely deflationary good deflation. The more costs fall and prices fall, the more units explode. That is the typical way that we exit recessions, or in this instance a rolling recession, and we believe that this time will be no different, with the exception that it will be more pronounced than it is in the past. As a result, we believe that the tide is shifting here, and we also believe that the surprises might be on the lower end of estimates, which would indicate that the deficit would reduce as a percentage of GDP more than people anticipate. You can see what I stated about M2 here. If you're interested, M2 is getting closer and closer to a growth rate of 5%. As you can see, that is represented by the purple line here. You will notice, however, that even that rate is on the lower end of what we have experienced over the course of the years if you take a look at this chart and view it through the lens of history. Now, another noteworthy thing to note about this chart is that during the 1960s and 1970s, you will notice that the increase of M2 on a year-over-year basis was higher than the growth of inflation. It was tolerating a wide variety of expenditures made by the government. You are able to see that this is being pushed forward by 18 months, and if we are correct, the inflation rate is going to come down. Additionally, there is a controversy that has been going on, and I believe that what Treasury Secretary Besant has been trying to protect against is that we do not end up in another accommodation period from the 1970s, which led to terrible inflation and double-digit inflation. If we are correct, this climate is likely to turn out to be much more similar to the 90s, when the pace of money growth was higher than the rate of inflation. And in point of fact, inflation is moving in the direction of a reduction, and what this will imply is that the velocity of money is slowing down. Now, the velocity of money, I am aware that I have included it in charts in the past, but it has been in a secular fall ever since the secular collapse. Although there had been a noticeable slowdown in the growth rate, the genuine drop did not begin until the late 1990s, with the rare cyclical boost occurring throughout that time. As of right now, we have just passed through the cyclical hump, and the velocity is beginning to decrease once more. Therefore, that pattern is significant. If it is still in place, then the expansion of money at this level is not at all an issue in terms of feeding inflation. This is because it is less likely to cause inflation. The rate at which money is turned over is referred to as velocity. Then why would it go down in value? Assuming that we are correct and that inflation is far lower than anticipated and that interest rates will follow suit, the mindset would be, well, I don't have to rush to buy anything right now because both inflation and interest rates are going down. In the event that we continue to follow the current trend that we are experiencing for the adoption of cryptocurrencies, there will be more than 1 billion active users in the cryptocurrency field by the time this year comes to a close. Permit it to sink in. Okay, fewer than 1% of the whole population of the globe own any XRP at all. It is less than 1%. Just try to picture what would happen if all of a sudden 15% or more of the world's population was actively participating in the cryptocurrency arena. You should consider the number of those individuals who will invest in XRP. When we talk about a scale of magnitude, we are talking about something that is so much greater beyond what your brain is even capable of comprehending, given the size of the numbers. In reality, no one's mind is capable of comprehending numbers on that magnitude. On the other hand, I am speculating that XRP, as a result of this enormous growth spurt, is most likely going to be one of the top performers. Therefore, what is the rationale behind that? That being said, the first reason is, of course, because of the way in which it is truly positioned to be a tool that the entire globe can actually utilize. Indeed, it is quite uncommon in the annals of human history for technologies that do not provide any genuine advantages in the society we live in today to really work in a credible manner. To be more specific, there are probably a handful of examples. When it comes to gold, it is not really that fantastic of a use case, since of course the metal itself is pricey owing to the fact that it is a store of value. And while it is true that it can be utilized in computer chips and other such things, it is perhaps one of the few examples of anything that people are in complete agreement on being a store of value during times of uncertainty. Bitcoin may continue to be a part of it, but we really need to look at the cryptocurrencies that are able to address problems that are actually occurring in the real world and that truly provide something of value to society. I really like XRP. HA is also an incredible thing. In addition, I believe that those particular ones are going to have performance levels that are completely out of the ordinary in comparison to the rest of the market, particularly with this growth curve. On the other hand, Cathie has something more to share with us today, which I believe a good many of you have perhaps never heard before. Now I'm going to play it for a short while, and then I'll go to the announcement that is most likely going to be the most significant of today's video, which will be towards the conclusion. Make sure that you continue to pay attention to that as well. First, let's talk about it. There has been a wall of worry that we have been climbing. I mean, a lot of people anticipated that the tariffs and the conflict between the Federal Reserve and the President would really shake up the markets, and the fact that there has